Today is Monday, September 24th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, let's start with the grains this morning. 3 soybean-related questions. 1, futures remain near session lows. Why? 2, what is the impact of U.S.-China trade deal on beans? And 3, what is your outlook for soybean prices?
Well, I think first of all, we're near contract lows in the soybeans, and it's because of number one, it feels like the U.S. soybean crop is getting bigger instead of smaller, and we'll see if the next reports show that. Number 2, despite picking up in exports from other countries, the lack of Chinese export demand is weighing on the market, both in the futures and in the cash. And then, so I think from an outlook standpoint, it's one of those things where if there's no deal, prices continue to trend lower. If there's a deal down the road, then prices will have like a spike higher just on the reaction. But all in all, we're off to a really good start in the South American crops, and so in general, soybean prices right now should trend lower.
So you're talking about maybe there may be more soybeans. You're talking about yield numbers?
Yes. So far, farmers are thinking where crop is harvested, which is about 10% now, they thought they were going to get 60 bushel beans, and they're getting 80 bushel soybean yields. So it just feels like the crop is going to get bigger.
Turning to corn, it seems like the corn futures are trying to bounce off contract lows. Why is this?
I think first of all is that we have some index funds, very large index funds, that feel that when they look at the price of corn, it is cheap versus like the stock market making new highs. They also believe that since corn is below cost of production, that it is a good buy. Last week we had one fund come in and buy 15,000 contracts of corn just because it's cheap.
Finally, Steve, the wheat futures bounced for the 3rd time since March and are finding good support near $5. Why, and what is your outlook for wheat prices?
Again, it feels like wheat has been in a trading range nearby Chicago between $5 and $5.60 since the first of the year. And as we get closer to the time in which maybe exports from Australia, Russia may begin to slow down, we could see a pickup in wheat export demand. So I think 2 things. Number 1, short term, the wheat market needs to see new demand for U.S. exports to push higher. Long term, if we don't have any weather problems next year globally, wheat prices will struggle rallying.
Alan, looking at the financial markets, some of the recent pressure on the 30-year Treasury bond futures market can partially be attributed to the increasing size of bond auctions from the Treasury. Are there other reasons for the selling in bond futures?
Well, there absolutely is. It appears that the U.S. economy is still in very good condition. In fact, the Atlanta Fed now is predicting that 3rd quarter GDP could be up as much as 4.4%, although that seems to be a bit on the high side. Many other analysts are closer to the 3.1% range. Plus, we do have the Fed likely to raise rates, very likely to raise rates on Wednesday at their meeting, and another rate increase in December, and a couple more next year. So tighter credit, a strong U.S. economy suggests higher interest rates and then lower prices for the interest rate futures markets, especially the 30-year bonds. So I would continue to sell rallies in that market.
Let's talk about the greenback. On Friday, the U.S. dollar fell to a 2-month low in spite of the ongoing trade tensions between the U.S. and China. Should this be viewed as a sign for longer-term weakness for the U.S. dollar?
Well, it absolutely should, because anytime a market does not respond to news as it should, and the dollar should have been a lot stronger with the ongoing global trade situation as it is, and yet the greenback has come under so much pressure lately. So my feeling is that rallies should be sold in the dollar. Something negative is likely in the form of news to be on the horizon, and the trend still appears to be lower. So I believe rallies should be sold in a dollar index.
Lastly, Alan, the S&P 500 and Dow futures advanced to new historical highs on Friday on
Right.
basically no news at all. What is the outlook for stock index futures now?
Well, first of all, today we are seeing some pressure in the stock index futures. Much of this, I believe, is linked to what appears to be no progress in the U.S.-China trade talks. New tariffs come into effect today. But the fact that stock index futures have held up so well at a time when there was plenty of news and reasons why they should be declining suggests that higher prices are likely. Just as I'm bearish on the dollar index because it cannot advance on bullish news, I'm bullish on the stock index futures because it continues to advance and rally when the news is really not that constructive. So I would buy any type of break in the stock indices. There is a lot left to the upside for all of the stock index futures, and I think this trend will continue for the rest of this year at least.
So, Alan, in February, obviously, we had one of the sharpest drops in market in recent history in the Dow Jones, yet here we are some 6 months later, and we've now made new historical highs in the Dow. Does this surprise you?
Not at all. Anytime there's a bull market, there are corrections, and that February break was a correction, as severe as it was, but we have come back, made new highs, so nothing has changed long term. I'm continuing to look for further gains.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.